September 14th. We are really just getting started with this webinar series, and we've had a few of these conversations so far. We're going to get back into it today, and here we go. This is 10-Figure Trucking Mastery. This is me, Cheston Bulgin, by the Books Consulting. This is how you can reach me and our company over here, 888-4BTB now. You can also reach out at our website and bythebooksconsultants.com or youraccountingsuperhero.com. So what we do over here is we work with you, carriers, small carriers, truckers, people in the trucking industry, to help them level up in trucking through being in a complete reality inside of their situation. And by getting in that complete reality, we can actually go to work to see exactly where it is that the gaps are and bridge those gaps inside of your operations. All right. So month-end close is about that process. That's what we do in month-end close, is getting you inside of that reality. It is a bookkeeping service in which we really get inside of the rigor of recording your financials inside of your business, making sure that you have the systems and workflows in place to get in that complete reality. All right. And we also do tax strategy. We're working so hard out here. It's not about, how much you make, it's about how much you get to keep. So if you're working hard, and I know you are, if you're inside of this group, you actually are somebody who is looking to accomplish a lot, and you're willing to pull the, pull the boots up, strap them up nice and tight, go to work. So you want to make sure you're able to keep all of that at the end of the day. So we do tax strategy to make sure that that is going to be something for you that's going to be available. All right, total advisory. We're in a conversation right now about financial literacy. Sometimes that skill set is not the thing that you have on board on your team. We bring that skill set to you. We actually look at the numbers and tell you exactly what that means, and then we can give you focus on where to go to work. Fleet advisory is another thing that we do. It's basically your operations in general, the systems that you have in place. We look at any gaps that you may have there and start building structures and bridges to fill those gaps. All right, so that's what we do. And man, this is 10-Figure Trucking Mastery. And if you didn't know, this is about creating a freedom, wealth, and legacy through transportation and logistics in the trucking industry, right? So this is what this group is about. This is the intention behind it, to make sure that you have everything that's wanted and needed to fulfill on these: freedom, wealth, legacy in transportation and logistics. Now, there's some tenets that we go by inside of this group, and what we're looking to bring to you inside of the mastermind. Intentionality is one of those things. So intentionality is, I have something that I want to create in life. And we're going to talk about that in just a few seconds. The other tenets here are financial literacy, structures, and actions. All right, so intentionality, getting back to this, is, what do you want? Period. All right, without consideration, what do you want from this company? What do you want for your life? And we went over a few things initially, that it could possibly be a couple of things up front. And then we talked about how we really want to get depth out of the intention. We really want this to be something that gives breadth and meaning to what you do, right? It has to be powerful enough to really propel you to the levels that we're talking about inside of this mastermind group. All right, so what is it that you really want? So we've been in this conversation, and this is what we're doing today, guys. This is financial literacy. So pivotal, foundational pillar inside of your business is financial literacy. All right, this helps you understand what it is that you are doing when you do it. This gives you a direction and focus inside of all of your operations, all of your activity. Every action that you take really wants to be inside of alignment to get you the most out of your financial results. We can only understand that if we really have financial literacy. We can understand that story. Okay. So we talked about the balance sheet. These are actually the foundational components of financial literacy, financial statements, So these are the basics: a balance sheet, income statement or profit and loss statement, statement of cash flow. The statement of cash flow is something that's not really talked about a whole lot, but it is something that you really want to understand and know, okay, as part of your financial statements. And there's also going to be something called a change in equity. This is also under talked about component of financial statements. Nobody really looks at statement of equity when it comes to lenders or people asking for your financial statements. And then if you're a business owner, you really do want to understand all these for the foundational components of a financial statement or financial statements, or this is going to make up your book inside your financial literacy. All right, so the talk we've been inside of for the last couple of weeks, we diverted last week and talked a little bit about income statements, but we're going to get back into the talk about balance sheet today. Okay. Last week we did start this income statement, but today, balance sheet. All right. So we just to recap and review what we talked about so far, we talked about what a balance sheet is. This is the formula for the balance sheet. Assets equal liabilities and equity. It is a simple formula. All right. So if I could think about this in terms of, where do my assets come from? If we want to understand what assets are, my assets come from somewhere. And that somewhere is going to be liabilities and equity. So what are assets? We talked about more liquid assets like cash and your bank accounts, invoices. And we talked about things like equipment. These are more fixed assets, real estate, real property. And what are liabilities? This is money that you owe. So your liabilities can be credit cards, business loans, lines of credit. And then we talked about equity. And equity is comprised of owner investment and retained earnings. Retained earnings being the money that's left over after you're operating your company, like the net income of the company. Okay. We got into some of the key things that we want to look at inside of performance. So performance indicators or objectives, key results, that's OKR. These are some basics that you want to really understand. These are the things that really transcend industries, not just the trucking industry, but it goes into other industries as well. All right, so you want to really understand some of these financial indicators. And why are we looking at the balance sheet first and foremost? When I take on a company that I work with, the first thing I'm going to look at is a balance sheet, because it's like going to the doctor. The first thing they do is get your vitals and get an idea of your overall general health. Right? They're going to take your blood pressure. They're going to look at your height, your weight, check your heart rhythm, all those things to make sure that there's nothing popping up. Right? And if there is something popping up, we can actually go to work on a solution for that to restore it. Right? So that's what a balance sheet is for your finances. You want to be able to understand the components of it, because if you can look at it and see what's going on, you can really get a quick bird's eye view of the health of your business, more so than any other financial statement. Okay. Everything else kind of plays into this balance sheet. All right. So that's why we're here first. And a couple of things that you want to understand inside of it. We talked about, these liquidity ratios like current ratio, quick ratio. We looked at return on assets. We looked at return on equity. And today we're going to be covering some different components of it. We're going to look at asset turnover. All right. Now, if you want to do a review of what we talked about in regards to return on equity and the other components of what we talked about earlier in the conversation, you can look at the videos inside of the group. They're going to be here for you to review whenever you want to. But today we're going to talk about return on asset turnover inside of this. Now, asset turnover is a real good indicator of how I'm doing inside of my business, like management wise, and the decisions that I'm making. So this is one of those things that you really want to understand, especially if you're in the trucking industry. Why? Because trucking company, especially if you're a trucking company like a small carrier and you're pulling freight, you're an asset-based company. All right, so this is why this is one of the most important things for you to understand, and a distinction for you to understand inside of financial literacy. Hey, Trami, I see you, man. I see you popped on there. Good morning, brother. But yeah, asset turnover can really give you a focus on what to look at and what to change inside of your business if it's not really giving you the healthy indication that it wants to give inside of a business. If that makes sense. All right, so what is it? So asset turnover is your total sales divided by your assets. So what does that actually mean? So I have assets. How much revenue are these assets generating for me? By proportionate, by like a factor, right? There's a healthy number inside of this that we want to know to let us understand whether or not our business is actually performing well for us. And if it's not performing well, we want to look at how can we get it to perform well, right? So generally, your business is performing well if your sales are 2.5 times or more of your assets. Here's an example. Let's say you have a truck that you purchased and it's $100,000. Then you have a trailer that you actually own inside of your business and you purchased it for $50,000. So you have a total of $150,000 in assets right now inside of your trucking company. So now if I'm looking at the total assets inside of my company, I'm looking to have my sales be a lot more than at 2.5 times what the asset base is. So if I know that I'm generating a revenue with my one truck and my trailer of $250,000 a year, take that into consideration with my return on asset turnover ratio. 1.67 is underneath what I would need in order to be at a really healthy operating point for my business. The thing about getting flat with this number is that now I have access. If I didn't know this beforehand, then I really didn't have access to improving the health of my business. Because, what's the immediate thing here when we see this? All right, so this is the thought process. I know that asset turnover is good at 2.5 times or more. My business is doing 1.67. What's it going to take for me to get to 2.5 or more in asset turnover? A couple of things you can do: increase revenue, right? Or decide in the future to reduce the cost, the purchase of your assets. Well, how is it that I'm going to actually reduce the overall investment inside of these assets and still get the same amount of revenue generated, right? And there's some considerations with that, right? If I take off the quality of the vehicle or the equipment that I'm purchasing, then I'm going to have another issue with downtime, and it's not going to last me as long, right? So there's going to be a combination of strategies inside of that you're going to want to use in order to have an optimal operation that gives you an asset turnover of 2.5 times your or more, 2.5 or more inside of that, right? So if I were in the company, the things I would do would be a combination of going to work on increasing the revenue. How much more productivity can I get out of the assets that I have on the fleet, right? Constantly on my mind. That's something that is going to be relentless. As a thought process, if I'm underperforming inside of that area, what's it going to take for me to get to that that level and above inside of my business? So every decision that I'm making in the back of my mind, my actions and decisions are based on that, right? Well, if I have, 250,000, well, well, how can I get more? Well, maybe I can turn my truck into a team truck and drop more loads and pull in more freight, right? Now I can double the revenue. Well, if I'm looking at 250,000 in revenue, that's really just about 20,000 a month. So I'm like really not doing as well inside of the industry as I can, because I know that in this market, other companies are doing somewhere between 25 and 40,000 with the truck. Well, how can I get my revenue up to between 25 and 40,000 with that truck and trailer that I have, right? Now, if you're in this conversation, if you already purchased equipment, then you say, man, I didn't purchase my truck for 100,000. I didn't buy a trailer for 50,000. I'm pretty good. I only paid, 100,000 between them, or less than 100,000 between them, right? And now, if that's the case, then your asset turnover is decent, right? You're already 2.5 times. If you're less than 100,000, you're already at two and a half times assets on your operations, which is good. And I'm still looking at how can I actually take it to the next level. How can I get to 3 or 4 times assets so that my business is really killing it? How can I get to double that bottom number? Can I get to 5 times assets with what I'm doing here, right? So this gives you access. This is what I mean by it gives you access, because if I wasn't even in this conversation about asset turnover, I wouldn't even understand that this is what I'm trying to accomplish inside of my business. And by me accomplishing this in my business, is like, yeah, Justin, it's like, okay, so what? Well, these indicators are here for a reason, right? They indicate like performance and how well you're doing. Now, if I can skyrocket my performance inside of how I'm managing my business, like by understanding these numbers and understanding these ratios, well, then I'm going to be set up for sure wins inside of my business, right? That's what I'm going to be set up for. Okay, so that's asset turnover. And we talked about the choices that we have now. So we're going to look at return on invested capital. This webinar, guys, we're going to have about 11 more minutes on this. All right. Hopefully we get done before 10:30 this morning. Okay. Return on invested capital. And I'm saying that because, financial literacy, I love this stuff, right? I could do like financial literacy. I can look at financial statements and financial reports and charts and trends and analyze these things all day long, right? And that's me, right? With you, I understand you're a business owner and you might not necessarily want to hear financial talk for about an hour, but I still want to get you the fundamentals of this inside of what you're doing, because if you get this, this is going to be like the key turning point inside of how you manage your business and what you're getting out of it, right? So we're going to talk about some key things in here. And one of the other ones we're going to talk about right now is return on invested capital, right? You heard about ROI, return on investment, right? And if you keep looking at the right side of the balance sheet, and this is why I keep it up here, we're looking at, owner investment. This is equity, right? And retained earnings. So return on invested capital is how much, total of money was put in by the investors. Investors meaning owners. All right, so how much money did you really put into your company? Right? If I had a choice between investments, like I can go to the stock market, I can do real estate, I can play poker, right, and get a return on some things, right? But I have a choice of investments to make with my money. So I have my money that I've worked to earn, put away, stockpile, saved, and now I have these choices available, right? So you decided to get into a trucking company, right? You decided to get into the trucking industry. This is an investment that you're making with your money and your resources. So this is direct cash that was contributed by shareholders or owners inside of the company that we're looking at in this distinction. So return on invested capital is owner investments. all right, in relation to net sales. So after everything is said and done, we can even look at it after tax and call it earnings. Usually they're looking at earnings before interest and taxes and amortization, depreciation. But we're going to look at it straight foremost, like we're going to look at it right, like clear. Net sales, including taxes, including depreciation and everything else that goes into this. What is the return that I'm getting on this? All right, based on the money that I have in it as an investor, as an owner of the company. So this is going to give you an indication of how well you are performing in your business and whether or not this is a worthwhile venture for you. And if it's not worthwhile for you, how can I make it worthwhile? Because here's the thing about owning a business is that you have direct control on the actual performance and the outcome of that business. I mean, there's certain things outside of it, like factors outside that influence how well you do, like markets and everything, whether or not you're actually outperforming your competitors and everything, competition and all those other things. But the bottom line is that you get to say so in how your business goes. Okay. So if I'm looking at it from an investor standpoint, like, is it a worthwhile investment for me and for others? And when I say for others, now we're talking about like saleable. Like I actually am clear about what my business is worth, what it's doing, and how it's returning for an investor from the outside looking in. And the other thing is you can say that I built this thing, right? This is something I built that can actually create this for another, not only myself, but for others involved. So net sales, right? So the formula for this, you take net sales divided by your total invested capital. So let's look at an example of this. Let's say you invested $50,000 of your own money. And in the business, at the end of the year, it generates $75,000 net income. That's after all is said and done. That gives you an ROI of 150%. Okay. So this is one of those things where you want to be completely in reality about investing in your business versus investing in other vehicles. Now, it may seem as though like I'm doing a whole lot and I'm only making, 75,000, but how much did you put in it? You really want to get flat with that. So in this example, you've made back your money in a year, more than that in a year. And everything else on top of that is just gravy. And you got to think about what other opportunity out there can do that for you, if this is the case. Now, if your business is losing money, right, which it will do, most likely if you're just starting out, right, it's very possible to make money in your first year. But a lot of times, if you don't have the experience in business, if you don't understand what the distinctions are inside of the market, the industry, and what you're doing, and then you don't have a whole lot of traction from the start. When traction meaning you don't have the clientele, you don't have the network, you don't have the broker relationships, you don't have the shipper relationships, and you don't really have the industry know-how, then it's quite possible that you will lose money in your first year, right? And then there's some cases where you actually generate a net income for your business, right? In relation to how much you actually put into it. Now, there are people here inside the group and inside the industry that have invested, hundreds of thousands of dollars into starting their trucking company, if not millions of dollars into starting their trucking company, right? And in the first year, they are getting a return. It's not getting their money back in the first year, but a certain percentage, when it's going to be 15, 20, 25 or more %, right? So if you're looking at it from this standpoint, it's like, well, how can I actually turn this into like a worthwhile investment for me? And if I'm out here struggling inside of my business and I'm thinking I'm not really getting a whole lot in return for what I'm doing, you really want to get flat on this number, right? Because you may actually be doing better than you think. hang in there, keep your boots on, right, and stay with it. And there are some things that you could do in order to improve, right? So that's return on invested capital. This is going to be the culmination. This is going to be the end point of our balance sheet talk for now. And we're actually, put down here, I will actually put in the chat here, we're doing initial consultations. Yeah, we have something going on, like a free complimentary strategy session, 30-minute strategy session that we're doing. And it's only for people who have not had a strategy session or have not done business with me before. All right, so we're going to be doing that because there's a lot more in-depth analysis that goes along with just understanding the financial position of your company. These are the basics. You really want to get a real good flat understanding of the basics inside of your financial statements, and the balance sheet is number one, right? You want to understand like what a healthy balance sheet looks like. And also, if you don't have a process here to make sure that your business is tracking everything like standard to the T, and you're not in a complete reality with what your situation is, and this is going to mean absolutely nothing to you. Like, you're going to look at a balance sheet and they're going to have no meaning, right? This is why we have month-end close for our clients. That what we do is because without it, if you're not recording everything that's going on in your business, if you're not in the complete reality of what is happening in your business, then all of this is going to be meaningless, and you're not really going to have the access that somebody who has these systems in place and has these processes in place that they do have, that advantage that they do have, right? You want that advantage in your business. You want to be really clear on what's going on, so that when you pull up these financial statements, you will have clear, actionable information that you can actually take and run with it. Okay. So guys, this has been a great call. All right. I will put that complimentary strategy session link inside this the comment section of this video, so you can get access to that too. Okay. With that, we're going to be complete with this call. It was great being with you today. We're going to pick this back up next week with more on the income statement. Okay. See you then.